Welcome to the deep dive. You're looking to trade smarter, not spend hours analyzing, right?
Yeah, absolutely.
Forget drowning in data. Today, we're giving you the essential pre-trade checklist. Think of it as your shortcut to making better decisions before you click that button.
Exactly. It's not about finding some, secret sauce. It's more about building a solid routine, a framework to look at each trade idea.
Helps you avoid those gut reactions.
Precisely. Those impulsive moves that, let's be honest, often sting. So we're diving into a set of core questions. The mission is simple. Give you something actionable right now so you feel more in control.
Okay, let's jump in. First up, context. The big picture. What's the main trend doing on those higher time frames? Daily, weekly.
Yeah, that's crucial. Are you swimming with the current or are you trying to go against it?
And if you are going counter trend,
Well, you need a very, very strong reason. You can't just guess. Understanding that wider trend gives you vital perspective.
makes sense.
Then you look closer. Where's the nearest support? Resistance. Those zones where price might react.
Okay.
And what about volatility? Is the market sleepy or super choppy? Tools like ATR, average true range, or even the VIX can help gauge that.
Does the current market vibe fit your strategy?
That's the question. And don't forget, are there any big news events coming up? Economic reports. They can throw a wrench in the works.
Right. Good point. So, okay, we've got the market context sorted. Now let's zoom in on the actual trade setup itself.
Right.
Does it tick every box for a strategy you've actually tested and know works for you?
This is key. Rigorous validation. Is it really meeting your rules or just looking kind of tempting?
Are things lining up, like maybe across different time frames?
Yeah, multiple time frames confirming the idea adds strengths. And critically, what's the potential upside versus the downside? Your risk to reward.
Yeah, the RR ratio.
Aim for at least, say, 2 to 1. Double the potential profit compared to your risk. You can also look for confluence factors. Maybe a fib level lines up with a moving average. That adds weight.
Okay, the setup looks solid. The RR is there. Now, the part everyone loves to hate, but it's vital. Risk management.
Non-negotiable. This isn't about hoping for the best. It's planning for when things don't go right. Where's your stop loss going?
And is it based on something technical? Not just, oh, that feels far enough away?
Exactly. Based on structure, volatility, something concrete, and how much capital are you actually putting on the line here?
The percentage rule.
Yeah, the guideline, a good one, is no more than maybe 1%, perhaps 2% of your account on any single trade. Stick to your daily or weekly loss limits too.
And what about slippage? That gap between where you want to get out and where you actually get filled?
Got to factor that in, especially in fast markets. And avoid putting all your eggs in one basket. Don't overexpose yourself, especially in correlated stuff.
Okay, makes sense. Numbers checked. But trading isn't just numbers. What about your headspace, your psychology?
Just as important, maybe more so sometimes. Are you clicking buy based on your analysis, or is it fear of missing out?
FOMO. Or revenge trading after a loss.
Right, those emotional drivers.
Yeah.
You absolutely have to be okay with taking a loss. It's part of trading. Are you rested? Focused?
Or are you distracted letting Twitter decide your trade?
Hey, yeah. Stick to your plan. Can you honestly look at this trade and say, yes, this fixed my long-term edge? Or are you just trying to force something?
Okay, deep breath. Analysis done. Setup checked. Risk managed. Head clear. Now, the nitty-gritty. Execution.
Getting practical. Have you clearly set your entry point, your stop loss level, and your take profit target in the platform?
Double check the order details. Sounds basic, but
Crucial. And how will you manage it once it's live? Trailing stop. Taking some profits off the table at key levels.
what if the market does something totally unexpected? Got a plan B.
You need one. A contingency plan for surprises.
So the trade's on, it plays out, win or lose. It's not over yet, is it?
Nope. The learning cycle continues. You need to commit to reviewing it. What was the rationale? What was the outcome?
Reading journal time.
Essential. Write it down. And stick to your exit plan during the trade. Don't second guess it based on emotion. Then later, look back at your journal.
Find those patterns, good and bad.
Exactly. What mistakes keep cropping up? What's working well? That review process is how you improve long term.
So let's wrap this up. This whole pre-trade checklist, this routine, it's not about guaranteeing wins.
No guarantees in trading.
It's about boosting your odds, cutting down the impulsive stuff, making sure you're trading your strategy, and just being more disciplined.
Yeah. Consistently asking these questions, it really can make a difference. It elevates your decision-making process.
So here's something to think about. What if the real key to more consistent results isn't about finding that one perfect trade.
But maybe it's about consistently avoiding the really bad ones, the imperfect ones, something to chew on.